if you feel like you've missed the boat on Nvidia, there's still a lot of other companies in the space that have room to run and have just started. There are billions of dollars flowing around in the industry that are being driven by the AI craze. And there's more to data centers and the whole picture than just what card is in the machine. So I'm excited to get into that and talk about all of the other companies that are involved. Obviously, Nvidia is involved in this, but there's a whole lot more that goes into it.
Definitely. The AI craze and the infrastructure behind data centers is huge. And of course, we've seen that propel Nvidia to become the largest company in the world. As of time of recording, it's about a $3.6 trillion valuation. But if you feel like Nvidia is too expensive or you feel like you may have missed the boat, I mean, granted, we are very bullish Nvidia still. It's one of our biggest holdings, and we continue to think that it's going to perform well. So as a disclaimer, we're going to talk about a lot of companies throughout this episode that we have ownership in, but we have conviction in them, and that's why we're talking about it today. But to give some background on this, the AI infrastructure trend, I mean, and the AI hype train, as we would maybe call it, is become from just hype or a question of whether it's real or hype to becoming just very, very real. I mean, companies that were giving 1 year projections or forward quarter projections are now giving 3, 5, 10-year projections as far as demand and runway go. And so we're talking about having a considerable pathway to value creation, to market creation in this industry. And there's a lot of companies that are going to benefit from it. And so I think today we kind of want to break it down into some significant categories. And there are really four, and maybe I'll add one more, 4 or 5 main categories of the data center infrastructure of the AI trend that we want to cover. So the first of those being compute, your chip makers. Of course, Nvidia is the preeminent company with that. They really don't have any significant competition as far as the highest end, the best performing chips. But you've also got power systems, which are incredibly important. We're going to talk about power systems and utilities. You've got cooling, which is incredibly important, both on the server racks and getting that heat out of those data centers. And then you've also got transporting the data. So that's both transporting it within the data center itself and then disseminating it to the world as you use those AI softwares. And then finally, my plus one theme is going to be security. A little piece of that is the physical security that it takes to make sure that those data centers are protected, because companies have poured billions of dollars into these data center buildouts. They want to make sure that they're physically protected, but even bigger these days, which is in the news much more common, is cybersecurity, making sure that data is protected and that it's going to get to the consumer to and from those using it safely.
Yeah. And so we're going to try and take it in an orderly fashion, starting kind of with the chips. Nvidia, of course, they own about 90% plus of the market. So that really goes to show, their kind of dominance that they have over the AI space. And so, kind of something funny I saw with Amazon developing their own chip to do similar things. Most of the time, these, hyperscaler chips are more supposed to support their Nvidia infrastructure rather than replace it. But they're kind of promoting this as having a second option in the market. And so for Amazon to be developing something as a second choice in the market really shows you, how little, AMD, hate to pick on them, but how little they are relevant to the story anymore. On top of that, Nvidia just, as a company itself, they're now the largest company in the world. They've overtaken Apple. That was a little back and forth for a while there, but have, sufficiently surpassed Apple to solidify themselves as the largest company in the world. And, that they've done that through doubling their earnings in the past 12 months. And then if you look back further than that, it's just orders of magnitude more than they were making 2 years ago, say. So they're still on a huge runway for them, huge growth. But we've talked about them a lot in previous episodes. So I kind of want to step past that. So once you have the chip, you have to put it in a rack. You have to put it in, kind of building out from there. Victor, you're going to take us into the next step.
Definitely. So the server racks are much more important than just building a shelf and putting a sophisticated chip on it. These include a lot of the power systems, include especially the cooling systems, because these chips require an immense amount of power. And so just delivering the power to those chips is important. And then cooling the chips because they also generate a lot of heat. And so the server rack companies, namely Dell, HP Enterprises, Supermicro Computer, are really the preeminent ones in the space, and those are outfitting the data centers, working in conjunction with people like Nvidia to develop these server racks. And now more and more what they're doing is building and piecing together these server racks off site and delivering them essentially completed to the data centers so that they can be hooked up, tapped into the power grid, the cooling infrastructure of the data center, and they're pretty much ready to go once they're on site. Then, of course, the other piece of that are the power systems and cooling systems that are involved with the data center infrastructure. So you can't just line up a bunch of server racks that are requiring immense amounts of power and just plugging them into an electrical outlet. It doesn't work that way. Plus, you have to have 99.999% uptime on these chips and these processes. Otherwise, these companies are going to lose millions of dollars. And so in making sure that that's set in stone and that's enabled, it requires having sophisticated power systems with redundancies, cooling systems to make sure the chips don't overheat. So companies like Vertiv are taking the power from the utility generator into the data center, dispensing that properly between the server racks, also helping conduct some of the cooling. You've also got companies, kind of your legacy, call it HVAC companies like a Carrier or a Train or a Johnson Controls, someone like that who is moving that hot air out of the data center into the, outside space, making sure that that environment stays cool. And so there's a lot of these things to make sure that these chips are optimized that are really, really important when it talks about the internal structure of the data centers.
Yeah, and I think something to point out here is it's hard to overstate just how much power and heat all of this produces. You're talking individual data centers on the order of hundreds of megawatts. And so that's, it's producing immense amounts of heat. That's, a small modular reactor produces, depending on the model, 75 to some of the larger ones up to 300 megawatts. So you're talking about a small modular reactor specifically for one of these data centers. So we'll get into all the power generation later because that's a very important component, but it's using that constantly. So making sure that power is uninterrupted, it's clean as they call it, so very consistent. No power surges, no power drops, anything like that. And just also all of that gets turned into heat. Well, not quite all of that, but a large percentage of that turns into heat that needs to get out of there quickly so they can operate at their peak efficiency. Because the enemy of the chips, it's very similar to a car, gets too hot, doesn't run as well. So, that's where we've seen liquid cooling solutions on NVIDIA's latest Blackwell chips take such center stage, because being able to more properly cool that allows us to drive more and more out of these chips. And so that's where companies, HP Enterprises, SMCI, Supermicro Computer are, working on that liquid cooling to help drive those, help drive that efficiency.
Definitely. And I think talking about those multi-year forecasts that I mentioned earlier, it's really fascinating to see that level of power consumption that is unlike any kind of infrastructure or industrialization that we've seen in the United States year to date. I mean, typically you have an electric grid that's really focused on, a little bit of commercialization, but essentially at the end of the day, population growth. Well, now you've got this huge demand that's coming from data centers. And we really covered a lot of this in our electrification podcast that I'd recommend to all of our listeners. But the amount of power required, Vertiv just came out with a 5-year forecast for 2025 through 2029, and they're estimating 100 gigawatts of outlay over that 5-year period for data centers. Well, to put that into reference, we currently have about roughly 22 gigawatts of entire data center infrastructure outlay right now in the United States. So that's essentially a whole nother install base every year for the next 5 years. And being able to generate that amount of power is extremely significant. So it's going to be really critical to look at the utilities, see which ones are growing and what the sources of that energy are going to be.
Yeah, when you're talking about orders of magnitude more energy consumption, that's that 100 gigawatts. Well, a traditional nuclear reactor produces a little over 1 gigawatt. Once you take in, productivity factors, downtime and everything, call it 1 gigawatt. So 100 nuclear reactors, those take years to build, 8 to 12 years, especially with the US's, lessened manufacturing capabilities, because we haven't manufactured nuclear on a large scale since the 80s. And so we don't, a lot of people have moved out of the industry, people have retired. We don't really know how to build those quickly. So 12 years is still a pretty, optimistic estimate in a lot of cases. And to build 100 of those in the next 5 years, that's not feasible. So, Victor, where do you think all of this energy is going to come from?
Yeah, Hunter. So I think that's really going to start with, on a short to medium term basis, a lot of natural gas power generation. The US is very good at that and has implemented a lot of natural gas power. That's pretty quick to get online. Of course, it does create some pretty significant infrastructure build out, but I think it really starts there. And then, as you mentioned, nuclear on a longer term basis. But the good thing about natural gas is it's flexible power so that you can ramp that up, ramp it down, depending on the need. Well, I mean, we mentioned that these data centers have to be running, 24/7. And so you're going to always be generating that. Well, you're going to have redundancy because these power plants, especially something like natural gas, can't run 24/7. So you have to have, the redundancy there in order to make sure that you have the power constantly delivered to those data centers. And I think it's really interesting, kind of taking a step back, but whenever you're talking about on site at these data centers, they have even redundancies for if the grid were to go down. Say your natural gas plant freezes up during a Texas freeze. I mean, we saw that just a few years ago. Well, they have to have redundant power systems. So they're going to have enough generators alongside that building to make sure that they have the power to continue to run that data center 24/7. And that's going to be about 120% redundant power over what they typically need in case, say, some of those generators don't work, for example, and only 100% are online. The idea is that they'd always be working, but you want to have redundancies because you can't have your data center go down. And so that's an area of the market that we're looking at too, the generator producing companies, because each of those data centers, they're looking at generators that are around 2 megawatts. And so you're going to have roughly, 50 to 100 of those per building, depending on how large your data center outlay is. And just the conceptualizing this power generation is really difficult because it's such a large consumption in such a small area. But to your point, I think it really starts with natural gas. Hopefully the US can remove some of the restrictions around nuclear. It's a very clean energy, low carbon footprint once it gets up and running. So I think that's really the future, but it's at least going to start with natural gas.
Yeah, I think I might be showing my bias a little bit leading into that with nuclear, because I think it's a really exciting space right now. I don't want to get too into the weeds on, I mentioned conversion factors, but that's like take the megawatt capacity of a power generation facility and then remove, any downtime, any, troughs in its production. Natural gas, for example, what you think of as, really, really stable, you just pipe in the gas and it runs, it still has a, productivity factor of about 53%, give or take 54%. So you'd really need to fulfill that, 100 gigawatts of demand, you'd really need like closer to 200 of natural gas. Solar, if we want to talk about clean options, they're down in the 24-25% range, whereas nuclear is sitting right up 95-96%. So, talking about that very little downtime, these facilities that we have are running from the 60s, 70s, and 80s when we built them all out, and they're still going. They just lifetime extensions, and they, some modernization, some upgrades, refuel them every once in a while, and they run well and safely nowadays. Barring a couple kind of fluke cases, there really haven't been that many issues with them, and none in the last 30, 40, 50 years that for nuclear reactors built in the last 40, 50 years. So I think that's a really, really big place right now, especially with those SMRs I mentioned earlier, your small modular reactors. That's, something that people can get online pretty quick. The initial capital outlay is a lot smaller. You have that uptime. They're a little more expensive to operate on a per megawatt basis, but by foregoing a lot of that risk that you have when building multi-billion-dollar power plants, people are a lot happier to take $100 million worth of risk than they are several billion, because some of these have expanded in scope from expected price $2-3 billion to about 12. So, there's not a lot of appetite to take that risk. So you see a lot of excitement about small modular reactors. And so that's a space we're watching right now. But the first ones in the US aren't slated until 2027, with more coming 2030. And these are mostly like testing units, proof of concepts. So it's going to be a while until we can really get these up and running on a big scale basis.
Definitely. Like I mentioned, long-term outlook for nuclear, it's going to be really interesting to see how that develops over the next couple of years, just to see the runway and where the potential is. I think really the next step in that, we need to bridge the gap between the power producer and the data center itself. So you've got the infrastructure companies that are building the cabling, the transformers, all of the parts of an electric grid that goes between the power plant itself and the data center. That's going to be a pretty significant outlay. So we're looking at the companies there. I think that's going to be an area where a lot of spend is happening. Cabling, whenever we're talking about cabling, coppers comes into that story. Of course, there's a broader global marketplace for copper, and we've talked a little bit about that on prior episodes, but those are some things that I think are important to look at.
Yeah, and just to interject there with, copper cabling and the transmission aspect, we saw the US's lack of having, enough transformers on hand. We sent a whole bunch to the Ukraine to help them because they were short of them. And then after the hurricane that really affected our East Coast, we were lacking them there. And so there's just like this big drought of transformers. And it's not just transformers, it's all sorts of that electrical infrastructure that, hasn't been exciting, hasn't been something people are really pushing to throw a lot of money at. But now more and more we're seeing that that's a spot of underinvestment that will need to be caught up on.
And then I think a couple of other areas that we want to make some quick notes on where we're looking at AI shifting to, or the spend shifting to, where you and I are looking at as far as companies to invest. One is going to be enterprises implementing AI. There's a lot of companies that are experiencing significant cost savings from AI. I know, for example, Walmart, JP Morgan, you wouldn't think of them as tech companies. They're implementing significant amounts of AI in their businesses right now, really trying to determine which companies are going to see the most cost savings from AI implementation. Then another piece of that, of course, is software. Who is creating the AI applications? We've seen them from OpenAI and ChatGPT kind of being the preeminent one, but so many applications are coming online now. Who are going to be the winners there? It's yet to really determine that, but somewhere that we're looking very specifically.
Yeah, and then looking at, something like Tesla is a great just example of this. Is not only self-driving is AI a huge portion of it, because that's, Elon Musk's vision is have it fully AI, not kind of predefined courses or anything, but just truly able to adapt on the go through a very robust AI model. But also the robotics involved, using as an example his Optimus robot, just being able to move, interact with the world and people, and kind of think for itself and be able to do that on a consistent basis, where you don't have to program everything like right now you do in factories. You have more industrial robotics, which is probably a more practical application of this than having your robot mow your lawn for you. But right now, those robotic arms that assist in manufacturing, they have very predefined courses. They go from on XYZ coordinates, they go from here to there, do a task, and then go back. It's giving them some AI capabilities in there so they can, do more complex tasks than just picking and moving.
Definitely. I think the robotics piece is really interesting, really exciting. It's going to be big for industrialization, for manufacturing, implementing that. It's becoming more and more implemented in other areas too. McDonald's, for example, you've got burger flipping robots out there right now, and other robots that are helping food processing, things like that, making so many areas of the market more efficient. And then really touching on that last kind of key trend that I mentioned, security. Cybersecurity is going to be big. And we're definitely invested in cybersecurity right now. I think across all corporate enterprises, it's important to have really strong integral cybersecurity systems. So those providers are really in demand right now, and I think that's even more so true about these data centers and AI applications that are using immense amounts of data, and they want to keep that safe.
Exactly. Whenever there's this much money behind something, these hundreds of billions of dollars in data centers and data center infrastructure, it's very important to keep that safe, from both foreign and domestic actors, because there are lots of threats, and especially in this, more volatile geopolitical world that we're in right now, that's more important than ever.
Definitely. Well, I think we kind of covered it pretty well. Like I said, our main themes for this: compute, power generation, cooling, data transfer, and then that last bonus one being security. Really important when it comes to AI. There are things besides Nvidia to invest in. Of course, we still advocate for Nvidia, but there's a lot of really exciting stuff when you talk about a mega trend like AI out in the marketplace.
Yeah, it's a really exciting space. So thanks, Victor.